today I bought my first 5K funded account and I also copped my first loss. So going into the day, we actually started an analysis on the DXY. As we can see here, we had a weekly fair value gap here after a sweep that got this previous day low got swept, this previous week low got swept. So we went down to daily. So on the weekly, it looked to be holding, even though it was a sweep. This overall trend was bearish. It looked to be holding bullish because it was holding this. Actually, we don't know that yet. This week hasn't finished. But we note that there's weekly fair value gap there. Onto the daily, we note that there is the weekly fair value gap here, as well as a daily fair value gap, a very small one over here. We saw that previous day closed above it and wicked into it, meaning it got respected. So we expect to be bullish for the next day. Our drawn liquidity is this fair value gap up here, and as well as a volume imbalance in here as well, before it might go lower. So keeping in mind that the DXY is bullish, we head to GBP, USD. We see that there was a daily fair value gap over here, followed by an inverse bearish fair value gap here. So looking at that, we closed above it. We were expecting to go bullish until we reached this weekly fair value gap, which was bearish. Over here, we tapped into it on the daily, and then we started closing down. So we have a bit of trapped order flow situation where our drawn liquidity is now down here, and then back here, unless it closes above or below one of these PD arrays. Looking at the fib, our retracement is to this fair value gap. So that could be an eventual target if this, after our bearish bias. But given the DXY today was bullish, we had a bearish bias coming into the start of the day. We noted that after Asia finish, we noticed previous day low here. At that point, we can only see up to here. We expected because we were bearish, midnight opening price over here. Expected to manipulate above that, take out all the Asian highs, and then sweep below. I did see that to an extent, so there was actually a fair value gap up here originally that I was looking at to fill, and once it filled this, I was looking at shorts. So I think I entered on after this candle for the short. I did not expect it to reach up into this range. In hindsight, should I have? Possibly, because that was the equilibrium of the bigger range. I only recorded the equilibrium of this range, I think. No, it must have been. I must not have factored in equilibrium of. Actually, I did factor in equilibrium of that, because equilibrium of that is that fair value gap up there. I did notice there was a SMT with EU at this point, so I expected some sort of rejection at this point. Unfortunately, in hindsight, it went higher. So at the time, I could see pretty much this. I did see the sweep a sweep of Asia, the trade into the fair value gap. It might not have been external liquidity. In hindsight, there were highs up here that could have been considered. Was there anything on the 4-hour fair value? There was a 4-hour fair value gap here. That's just something that I may have missed. Yeah, let's draw that in now and see what the result of that is. So that 4-hour fair value gap, it was actually heading up there, and that's what I missed. So we did see, and that's our external liquidity. But at the time, let's see what I saw. Very sloppy model here. I have my market structure shift here and here. Took this point since it was lower. This was a fair value gap, a tiny one, or this was a fair value gap. So the entry risk was pretty much here. Stop loss up here, and obviously got destroyed. Now, in saying so, what I could have noticed was that there was a fair value gap here. High was taken out, low was taken out. This right here was the optimal entry, driving all the way down. So my entry was at 2:47 a.m. Optimal entry about 3:30 a.m. driving all the way down below Asian lows and to my drawn liquidity that I actually previously marked out. So this would have been the trade. Unfortunately, it wasn't, but we go again tomorrow, and let's see what we come up with.